Well, hello, everyone. Welcome to another Market Conversations. I'm Jerry Hall, and trust me, I feel better than I look. It has been a horrible week for me. I've been sick as a dog. I rubbed the skin off my nose from blowing my nose so much. I busted out in some kind of fever rash thing. I can't shave. And it hurts when I smile because this area of my skin is so tight and sensitive and inflamed that, oh, there it goes. If I smile, it hurts. Yes, Bitta, I'm sick as a dog. However, you can't catch anything over video, right? You cannot get what I got by tuning into the show. So, I wanted to have kind of an open AMA tonight, folks. You know, questions, I'll do the best I can to answer. And I really want to look at this space and where it's going. There's several reasons for this. One, for some of us that have been here for a while, it's very clear to see, like when I look at my portfolio, which is just screaming, as I'm sure your guys is also screaming to a good scream, right? Screaming north, like a rocket ship going into outer space. I'm getting sticker shock. You know, I want to continue to dollar cost average new money that comes into my life into this space, but I'm looking at my average cost for the tokens that I hold. And I've reached my goals for the most part, as far as how much of Bitcoin I wanted, how much Ethereum I wanted, how much Cardano I wanted, how much XRP I want, etc. So I've reached a lot of my goals, almost all my goals that I'd set for myself earlier. And so I'm thinking to myself, I've kind of had this little adage for a long time. You can never have enough Bitcoin. And you can never have enough of the smart contracts protocols that, could possibly launch the next whatever. And so as I was looking at these things and some of the projects that I would like to have more of, like Solana, is just, it's screaming. I bought Solana 2 months ago at $20-something, $28, and now it's $150 or whatever. It's like, oh my God. And it's that way for every asset on the board, right? And so what I'm thinking to myself, because I don't have a lot of new money that comes into my life, the truth be told, I don't. And all the assets that I already currently own are all in some form of yield mechanism, whether it be a Nexo or a Celcius or the actual wallet for the protocol itself, like Audius and Fetch and AGI and Avalanche and blah, 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 blah. I'm thinking to myself, what's next? Is there an undiscovered territory in this? Is there something that isn't on the radar of every boy and girl? And I hearken back to this conversation that I had with Raoul Pal interview on the channel. And Raoul's really excited about community tokens for good reason. But there are verticals or segments of this industry that I believe are just going to explode, but most likely much farther down the road. Like AI. I believe AI is going to start weaving its way into many already existing industries and getting market share. And therefore, private industry AI, as well as open source blockchain AI, will gain adoption. But how fast? I don't know. And then how much of that is already baked into the cake? In other words, how much of that is already priced into these things? When you go look at the stock market for AI companies, publicly traded companies and look at their valuations and what they've been doing. And you look at in the digital asset space, there's really only two that I put my money in, and that's Fetch AI and Singularity Net. So then it occurred to me. There's a whole industry dominated by the millennials and Gen Zs and subsequent generations that are going to come after them. And that is this virtual reality or augmented reality space. I honestly believe there's going to come a day where normal websites, like we normally tune into or dial up on our browsers, are going to be literally replaced by putting in coordinates for a digital environment. No different than coordinates if you're geo-mapping the planet, they're geo-mapping these digital environments. I think this is going to be big. And there's a very good chance that there can be some gems found. A couple $100 investment could be $20,000 in 10 years. Those are bets I'm willing to place. But if you take that same thinking and apply a simple tool to risk analysis isn't so much, when you're looking at placing these bets, it isn't so much about the company itself. It's about the amount of money that you're going to put at risk. Here's an example. So let's say I get into, and somehow I'm able to find Voxel, the metaverse play, virtual reality gaming world. Let's say I'm able to get their token, their VOX token, and I put a couple $100 into it. I'm not thinking that much about Voxel. I'm thinking about the $200. So what is the risk? The risk is that the $200 goes to zero, or the upside that the $200 could become 10,000, 20,000, 200,000. You have to extrapolate or assess some upside to it. But when you do that analysis, a $200 bet that could go to zero, but could also go to $20,000 is a bet that you almost have to place. If you were playing poker and you were getting those odds, you are almost mandated to put your money in. If the downside is 200 and the upside is 20,000, the risk to reward ratio is so skewed in your favor that those are bets that you take. And so I've been thinking about that and kind of framing what I'll call my next generation of investments. Obviously, I'm very happy with the portfolio that I have. It's been 3 years in the making, and it's performing like a champion. And there's a tremendous amount of continued upside in the fact that every one of those assets is earning more of itself through its yielding mechanisms. I can kind of just leave it alone. It literally is dollar cost averaging itself, right? Because if my Bitcoin is earning more Bitcoin on Celcius or Nexo every day or every 5 days, then that is acquiring more, right? I am building my position. So I've been thinking about this, and so that's kind of where my head's been at. I've been looking at where is the next area to really look at? Is it the Internet of Things? Is it machines paying machines? Is it medical data, right? Is it stuff like, compute power, right? Excess space on your computer that you lend out and receive some form of compensation for it? Is it gaming, whether that be adult gaming in the games of chance, or games of skill like poker, or just games. This, I don't know how many of you folks have tuned in to other channels and saw some of the stuff they're building on Solana, but this Star Atlas project looks pretty cool. It looks pretty cool. And I think the future of gaming is going to have that value monetization element in it, where you can monetize your time in the game in some way, shape, or form. Many years ago, after a divorce and raising a son, I discovered this game called Second Life. And it was really quite amazing. It was very similar to this metaverse that you're hearing a lot about nowadays. And I, with a little bit of software, was able to become like a DJ. And they had all these virtual environments where people would gather. And if you got involved in their DJ group and started DJing at these particular places, the patrons, the people that were there in these virtual environments, would use this internal game currency called lumens. And they would tip you lumens. And how they got lumens initially was through buying them with their debit card. So taking currency from the real world, converting it to a digital currency for this in-world environment, and then boom, now there's a robust internal economy. And it worked both ways. So you could buy lumens, or you could exchange lumens for dollars and put them back in your bank. And I remember I did this for, I don't know, I was messing around on that Second Life, having fun playing music. I was playing all my favorite rock and roll. So I would find the environments that like to listen to the classic rock that I really liked. And I'd get little DJ gigs there, and I'd put together playlists and do little snippet verbal stuff in between songs. And it was just fun. I got tipped a ton of lumens. Some of those things got turned into real cash and bought bread and milk and stuff like that. I think that is going to explode. And the whole notion of interoperable digital assets that can convey value cross-platform, I think there is some real there. There is some real there. So that's what I'm excited about looking into. Let me go through here because I've just been ranting and say hi to everybody. Hello, Belinda. Nice to have you. Of course, Apex Crypto, Ellie Pool, Danny Steele, Johnny, Lori. Nice to see you. Usha Gagami, Bill Gould's in the house. We got Simon. Let's see. We got DC Precise. We got Bita Av. Mizzo, Sean, nice to see you. Michael, nice to have you in the house. Cougar Love. We got Crawford Fortune, and a whole bunch more I can see in the counter that are viewing that aren't chiming in. So Brady, were there questions? So I'll give Brady a chance to load up some questions on the screen that I didn't see. I also want to invite, if there's any of you that want to come on screen and chat, Simon, Brady, get that man a link. Simon, how it works is we need to get your email. So if you can connect with Brady, get your email. We'd love to bring you in. I'd love to have you in, Simon. Folks, I know I look like death warmed over. I don't feel as bad as I look, but I've had this really bad flu this week, and this is like the later stage of it. So I'm no longer, constantly, with a sinus full of stuff, but I am breaking out. It's like really weird. I'm breaking out in this, like a fever rash thing, and I couldn't shave. I started to shave, and oh man, it was so freaking painful. I said, you know what? Nobody's ever tuned into this show for the aesthetics.
I just had to be honest with myself, emotionally honest with myself. People aren't tuning in for the aesthetics. They're tuning in for the content, the interaction. And I can still do that. I don't feel so horrible that I can't be on air. So here I am. I think hopefully Simon's working his thing out with Brady. Cougar, good evening. I got to say hello to Cougar, fellow Costa Rican. Good evening, Jerry from Flamingo. That's up north in Guanacaste, right? My holdings from top to bottom, XRP, ETH, Stake, VET, AGIX, HBAR. I don't know what EWT is. I don't know what Trias. I do know XDC, and I'm set and ready for the moon. That a girl. Set and ready for the moon is a great place to be. Phil Moore, nice to see you, man. The rugged look. Yeah, the death warmed over look suits you, Jerry. Thank you. I don't know how I should take that, but I'll take it as a compliment. Boston. Mizzo, I lived in Watertown as a child with my grandparents for a little while. Cool. All right. What's the name of the software? Sean's asking, what's the name of the software you're using for comments to appear on your live video? This is the free version of StreamYard, logo above. If it wasn't the free version, we would put my own logo in there. But because I am the kind of guy that will rub two nickels together in hopes to get a quarter, we're on a free show. Interledger protocol, or there's all kinds of stuff. Apex, this interoperability stuff, you got blockchains that are trying to achieve it themselves on a protocol level, i.e. the dots and what have you. You've got the W3 has what Ripple made, which is the interledger protocol. I'm not really sure how that works. Yeah, exactly. Gifted to the Web3 Foundation. Right. I think it's incredible. I hope more people do it. I'm really looking forward to a world where things just seamlessly, just like our emails and stuff do now, just kind of go where they're supposed to go with no fuss, no muss. See. Where was I? I was rambling. I had a ramble. I was rambling about something. It was probably pretty good. Energy Web Token. Apex, thank you. Energy Web Token. Have no idea what that is. All right. Simon's got the good email in there. We'll have Simon in the house in just a minute. Lorena, first time on the live stream. Well, nice to have you. Glad you tuned in. There was something I wanted to shout out the Patreon group, the Beyond Moon Investment Club that we started in February is not only growing in numbers, which is wonderful. That's been great. We built a fund through all the subscription. So I don't take and use the subscriptions to live on or buy stuff. Every dollar that comes in from the subscriptions goes into an investment fund that the top tier of the group allocate. And they decide, we once a month get together, talk about tokens and what the allocation will be and this, that, and the other thing. And that sucker, I opened her up today because, the last couple of months have not been that great for us as far as profitability, right? A lot of us have seen, because kind of came down. I opened that sucker up today just to look. Oh my goodness. What a difference a couple of days will make. Isn't crypto friggin' amazing? One of the folks I work with on a private one-on-one stuff we do once a week, we meet. This person had a tremendous amount of their net worth locked up into the stock market.
And it's been a process of going through that portfolio and deciding what is a long-term keeper, what stays, and what goes. And this might be a good exercise for a lot of you folks to do, right? Because I know a lot of you are working and you have company-sponsored 401ks and things of that nature. You may even be in self-directed IRAs with brokerage accounts and things of that nature. And one of the things that we discovered as we were going through this particular portfolio is that there were a tremendous amount of assets that sounded good when they were acquired, but don't pass the smell test anymore when you start looking at what is the expected rate of return, right? What do we expect to see performance next year? Well, how can you gauge that? Well, is it listed, where is it listed? On the New York Stock Exchange? Is it listed on the NASDAQ? Is it in the top 50 assets on that platform? Or, where is it? And then let's look at what they've been doing. Hey, Pete Kelly. And it's amazing that when you start really, Julia, when you start going through and looking at the estimated return on investments for things that are in the traditional stock market, whether they be a wonderful stock that's done 15, 16% a year every year for the last 10 years, and they pay a really great little 1.5 or 2% dividend, When you start looking at those things and comparing them to just a base case of 50% year over year appreciation, and that is, come on. If you're saying crypto is only going to appreciate 50% a year over year for the next 10 years, that is ultra conservative. That is mega ultra conservative. But if you just use that metric and look at what you got versus what you could be in, and you start thinking about everything through a lens of return on investment, it was amazing how many things we could go through and go, I don't know if this still has a place here. It was really quite interesting, this evolution, and I'm seeing this with more and more people. I, of course, did it with myself, but I drank the Kool-Aid a long time ago. Dash, hey, nice to see you, Dash. And Gary. There you go. Gary makes a good point here. There are people who have invested in either cloud compute space, actual hardware in their own homes, and got in the node game, right? Being a node, being a validator on a network. There are a lot of folks I know, a lot of good friends of mine have, especially a lot of the YouTubers, have their own Cardano staking pool or Avalanche staking pool or this staking pool or that staking mechanism because it generates rewards. And of course, they disperse the rewards to the stakeholders. But as the operator, you're also earning rewards, right? And when these assets start appreciating, like, can you imagine running a Cardano pool? Now, I talked to a good friend, Adam, over at Texas Stakes. I went through this with him 6 months ago. We went in detail because I was seriously considering doing a Cardano staking pool for the investment club, our Patreon group, the Beyond Moon Investment Club. And then obviously letting you guys know about it and doing, the whole deal, right? Super competitive pricing on the margin, percentage capped, all that kind of stuff, giving you the best deal we could possibly give you, and still run through because I'd be staking my own stuff on it, and the group would be staking their own stuff on it, and obviously the group's fund itself, all the Cardano would be staked on it. But at 30, 40, and 50 and 60 cent Cardano, even up to $1.50 Cardano, you need to have some serious you need to have 1 million, 2 million Cardano on that sucker to get an ROI to justify the overhead. And I was thought, I don't know if I can get that kind of support. I don't have 1 million myself. And I know a bunch of people in the Patreon group have Cardano, but I kind of know what they have because I work with them every day, one-on-one. We don't have enough to do it. I don't know if the audience will do it. I don't want to take the chance, right? I wasn't willing to take the risk. But at $3 Cardano, you don't need 1 million anymore. And it's like, wow. Wait a second. I might have to revisit that. So put in the comments. Would you guys want to do to get in on a group pool and instead of being like where you're delegating to somebody else's pool, you're going to have a stake in the pool. Like do a share thing, right? Every Cardano is a share, or every block of 10, or we come up with some math that works, but that you actually take ownership of the pool as opposed to just delegating to somebody else's pool. I'd be interested if you guys would be want to explore that. I think there's something to that. Look who we got in studio. Let me welcome in Simon. Hey Simon, how are you tonight, man?
Yeah, good, man. How you doing, Jerry?
I'm good. Nice to finally meet you kind of virtually.
Yeah, man, I don't normally do this type of thing, but I heard you saying what's the next big thing, and I thought, put my hand up. I know what the next big thing is. I'm going on the show.
Oh,
yeah.
Do I need to get my notepad and pen?
Oh, look, if you like.
All right, let's talk about what the next big thing is, man. I'm with you. Let's go.
It is truly the energy sector, Jerry. It truly is, in my opinion, and I'm betting big on the uranium market at the moment. Just on the uranium spot price, I think's the go. And my whole thesis on this is that I don't want to go too in depth on it, but in a nutshell, like the way I've had it explained to me is that if you go home in 20 years' time and you turn on the light switch, do you think the lights are going to come on? Well, you'd hope so, right?
I'm making an assumption that the answer is yes.
Yeah, the answer is yes, mate. And we'll use America as an example, okay? So America produces 3% more energy than their demand, and 25% of their energy demand comes from uranium. So if you pulled the uranium, nuclear energy out of the Americans' power supply, their power grid, you'd have blackouts and power outages all around the country. And at the moment, the uranium price, it costs more to produce than they are selling it for. So just on that alone, the price has to go up. Now, what's happening at the moment? A few uranium ETFs have gone up 100% in... they forward bought. They forward bought their shares because they know the uranium price has to go up as part of the Green New Deal and everything else. And it's massive. Like the uranium price was more 30 years ago than it was today. So I think on all those points alone, the uranium market is a
here's the only I don't know crap about uranium, but I do understand commodities. And so this is what I will tell you. Any commodity that is through mechanical or man-driven enterprise extracted or created is subject to all of the same pitfalls. And that is, as its price accelerates, so does the manufacturing or production of it.
That's
all right?
Shares and just not the raw material. That's why when a price of commodity goes up 10%, the price of the mining shares go up like 120%.
Yeah, sure. But again, okay, back to any non-finite, right? I don't want to use the word infinite, but non-finite commodity. If the price goes up, the entire industry is incentivized to produce more, right? That's not. I guess that I'm not asking a question. That's a rhetorical question.
Right.
The answer is yes. So therefore, if they saturate supply, if demand does not increase relative to supply, you're going to see price come down. That's a commodity story. It doesn't matter if you're talking about corn, cotton, oil, uranium, copper. It doesn't matter. When I look at your thesis, I have to say I think the general direction is correct. I think you're absolutely right on the direction. Here's what I would want to know. From a return on it, so as an investor, right? I'm not a technologist, I'm not an engineer, I'm not any of those things. I'm a guy that when I put $1 in, I want to estimate what I'm going to get out, right? So what do you think, what numbers have you come up with that you can do a 5-year plan and say my return, every dollar I put in, I am expecting to get a dollar back? That's 100%, right?
I'd like to see 15x. I would really. Sorry, man, we're moving around here doing a few little things.
Okay, so is that the best case scenario is the 10x?
No, I think it's a lot more than that based on the last uranium bull market. Because we've been in a prolonged uranium bear market for some time.
Okay, all right. So check this out. Let's walk this through. So I'm not disagreeing with your thesis. I just want you to know that.
Are we about to compare uranium price to Big Macs? I mean to Bitcoin.
No, well, yeah, sure.
Okay, cool. Yeah,
because it's not okay. At some point, every single one of us, as an investor, your moral obligation is to your balance sheet, right? At the end of the day.
Okay, yeah.
At the end of the day. Now, if you are already wealthy, diversifying out of your wealth zone, right? Whatever you got a lot of, is a smart idea. Diversification is a very good idea for very wealthy people, right? But if you are trying to develop wealth, if you're trying to create wealth, if I put $1 into uranium and the best case scenario is at 10x's, then I'm not putting $1 into AGIX, which could 100x, 200x in the same 5-year time frame. Yeah. And both bets, but let me finish the thought. Both bets have the same downside. The same downside. I lose the $1. So if I take $1 and I put it into uranium, right? Yeah. Or uranium miner that's going to 10x, then that can get me $10 back. Okay, great. That's a good play. That's a good play. You measure that against the S&P 500 or the Russell 2000 or even the NASDAQ. That's a good play. It's a good play. But when I look at a Cardano, a AGIX, an Ethereum, a Bitcoin, and I break it down over the same period of time, we're not even in the same ballpark. 100x and 10x is 90x away. I mean, there's a big, you know what I mean? There's a big difference. So when you're trying to develop wealth, you concentrate your bets on the highest ROIs that you believe in, you've researched, you've done all the work. So I love your concept. Take it to the next level. Where does your thesis
fit into this new digital world?
Yeah, well, power consumption, mate. When everyone goes home at once and plugs in their electric car and goes to bed and plugs in their Tesla, what's going to happen?
But what I'm saying is there a blockchain solution with uranium or energy grid management?
For energy, yeah. Look, in Australia, we've got what's it called down here? We've got Power Ledger, and there's plenty of blockchain power type of things, but I'm just talking about the sheer spot price of uranium, which doesn't really require blockchain. You can do that on a simple database.
Yeah, but okay, hang on a second. Follow the logic here. Follow the logic with me. So if uranium is your sector, right? And you folks at home, we're not really talking about uranium. We're not really talking. Think about the logic. Walk through the logic. So if it's power, it's energy, right? The energy sector, uranium specific.
Yep.
Is there a uranium mining company that is creating efficiencies by using better technologies? Supply management on blockchain. Is that token available? Are they using, what are they doing to incorporate these technologies that are coming online that will make them more efficient, more profitable, bringing a greater return to the investors that invest in them over the next guy?
Yeah, look, I see it. I see what you're talking about, and there is, but it's not blockchain.
Well, okay, hang on a second. It's to the best of your knowledge, it's not blockchain.
Oh yeah, look, the actual answer to your question is I don't know.
Well, there, perfect. And now you have something that you can do when you're not following the Market Conversations live stream on Friday nights. You can start to dig into who is developing a digital, cost-effective, cost reduction product technology for the industry that you think is going to expand.
Yeah, okay. All right.
And the reason why I'm using you as an example, because you and I were able to go back and forth, this applies to every single one of us for every single thing. It's the same process of analysis, right? It's the same process of analysis whether we're talking about cotton candy or uranium. It's projecting forward outcomes, understanding risk assessment. We went through that model, the 10x versus 100x. Same downside, losing $1 is losing $1. It doesn't matter if you lost $1 in Bitcoin or you lost $1 in uranium. Losing $1 is losing $1. So what's the upside? Except, you know what I'm saying? Walk through these things when you are coming up with investment ideas. Because I agree with you. We can't get stuck in it's Bitcoin only, or it's Bitcoin, Cardano, Ethereum, Polkadot, or it's XRP and XLM and XDC. Don't get stuck in a thing.
Absolutely. What's XDC? I know what XDC is.
Oh, it's a payment token, just like XRP or XLM or.
I've got a fat bag of it, but what's it doing? Have we got any XDC news? That's what I like about XDC. They're doing things, but it doesn't pop up in the news like like Ripple show all their cards at once. I know they've got contracts they can't.
Well, R3 and R3's trying to take R3's trying to get become part of the bedrock of the European banking system with their with what they're doing with the Italian banks on a national level. They're trying to expand. They're trying to create a R3. R3 is trying to do the. They're really trying to dig into Europe.
Yeah, look, I got into XDC about 3 cents. It was. But I had to pay some ridiculous gas fees to get it, man. Like, far out. Anyway, that's another story, man. Like, have you got money? Have you got money in ETH? Have you?
Oh yeah.
Really?
Dude, I've got 27 assets. So a number of having a lot of assets is not a problem for me. I got a bunch of them.
I can't bring myself to buy ETH. I look at Vitalik and go, that guy's bloody junky.
Well, let's whether or not it's Ethereum or any project. What are the value propositions? What are the negatives? Right? We should all be this honest with ourselves and our portfolios, because at the end of the day, it's about the balance sheet. It's about the number. Do you want to be morally right, or do you want to be friggin' rich?
I want to be morally correct. I don't want to be.
Oh, okay.
Yeah, no, I do.
Then I can support that. If that's honestly what you want, I totally support that. Me, I'm kind of going for the rich thing. I've got plenty of morals. I'm a man of integrity, but there ain't nothing wrong with being rich.
Yeah, man, I'm sitting outside my pallet factory at the moment in my truck because it's nice and warm, and that's to get rich. Like, we're getting there, but I don't want to be, I don't know, you got to have some type of integrity in life. Like, I don't want to be that guy that steps on a bunch of other people to get what they want.
Well, okay, there's one thing. Okay, I'm getting rich from the decisions I make, not from the advantages that I take of other people.
Okay, yeah.
Those are two totally different things. It's not get rich at any cost, but I want to be rich.
Yeah, absolutely. Well, I can't see the comments. What's that one say?
This says Dash. I'm okay joining in on the Cardano fund, but I'd be worried about Cardano going down by 90% during the bear market. All right, that's a very, very legitimate concern. Here's the thing. None of us really know. Uh-oh. I lost Simon. Anyway, none of us really know. But I suspect that all of the models we've used to look at markets are changing. The reason being is we're talking about networks. We're not talking about companies. We're not talking about discounted cash flows. We're not talking about price to earnings ratios. That's not at all what we're talking about. We're talking about networks that are made up of people like you and I, that every single person that joins a network, i.e. buys a token of a specific network, is incentivized to attract new users to that network. It's in your best interest. It's just behavioral economics. I don't know if you thought about this in this way before, but open source technology lends itself where every single participant is adding value to every other participant. How much value would Facebook have if it were the only thing on the internet? Right? How much value would Facebook have? How much value would anything have if it was the only thing? See, everything on the internet is adding value to every other thing on the internet. Because once I come to the internet, and for instance, the first thing I do is check my email. Well, if that's the only thing that the internet had to offer, my experience on the internet would be very short. I'd check my email, I'd respond to my emails, and I'd walk away. But because there is Twitter, because there is Facebook, because there is YouTube, because there is Wikipedia, because there is, I find I spend so much of my time on the internet in various forms. Some of it's studying, so I'm doing Google searches and I'm reading. Some of it's video review. I'm watching a seminar or I'm watching an hour-long interview. I'm also doing things like entertaining myself. So I'm watching, right now I'm watching stackable plants, right? Planting vertically instead of in beds horizontally on the ground. So my entertainment, my education, my socialization, so many things are happening on the internet, and each one of those things are adding value to me. So my participation on the internet is much longer. Well, the same is going to come with these digital assets, right? So network effects, exactly. So when you have, hey, JDO, when you have these things that are interoperating with themselves and they have a global marketplace, I don't know if you can say that we've got bull and bear markets and next down cycle and this, that, and the other thing. I just don't think those models work for this. And I think people that apply thinking and logic and analytics to this space using those tools, it's like sending an electrician to go put in the toilets, right? He's got the tools for wires, but maybe not the pipe wrenches. He's not going to be having the same tools to do the job effectively. It's just something to consider. I could be wrong. I may be wrong here. But I tend to look at this as networks. And the only reference I have is the Amazons, the Googles, the Facebooks. From the old world, and telecommunications, mobile phones, etc., to look at how network adoption and network growth happens. What are the cycles related to it? They're completely different than boom and bust cycles based off the business cycle. Completely different. So I think at some point we're going to get to the, and I think we're getting there. We're getting to the point where there's no going back to that old infancy. It's like you're only a baby once. Welcome back, Simon.
Hey man, I'm back. I don't know about what you're just saying, dude. Like, what happens when Elon Musk dumps? That's going to be a big thing. I think we'll always see 9% dumps. Like, we're going to see 9% dump in Cardano. It's expected. I
don't know. I honestly don't think we'll ever see another 90% dump. I think the market's maturing too fast.
Oh no, we'll see another dump. Nothing.
No, you said a 90% dump.
Oh yeah, okay, all right.
I don't think we'll ever see another 90% dump.
Yeah, well, okay, so if we had to say, if we're looking at pullback, what do you think the bottom will be for?
I don't. That's not the game I play. I'm not a trader, so I personally don't care. I honestly believe there'll be 3 steps forward, 2 steps back, sometimes 4 steps back, but recovering quickly and gaining at least 3 of those steps back, if not all 4 of those steps back, because what we're experiencing is network adoption, not company growth. These are not companies. This is not company growth. These are networks. And the world has not had them long enough to develop very precise understandings, therefore tools to measure forward outcomes.
I don't know. I think we're discrediting. I don't think when you think about the Bitcoin halving, if the halving effect, which includes the dumps, when between halving effects, we're saying that's not relevant. Is that what we're saying? Because
we're not saying there won't be ups and downs. I'm not saying that at all. What I'm saying is that we're continuing. We're at the beginning of a network growth cycle, right? And we're nowhere near market saturation. We're nowhere near network saturation. Just go back and look at the internet. It's the thing that has the most in common with these digital networks. It's an open source. The internet itself is an open source permissionless protocol.
that's global. Go back and look at it, right? Go back and look at it. Look at our crypto space. Put it on the same trajectory at 10 years. What was the growth rate of the internet? Look at the growth rate of digital asset space. Digital asset space is crushing the internet growth. Internet growth was growing at 63% a year from 1990 to 2000. That's in 10 years, the first 10 years.
And Ron Paul was saying that.
Exactly. And so if you look at crypto in its first 10 plus years, 11 years, it's at 130% a year. It is doubling the growth rate of the internet. And it's probably because of the internet. Information is so accessible, more accessible now than it ever has been.
Yeah, I'll give you that. So,
I mean, folks, you're all entitled to your opinions. If Dash says it's gonna dump, I promise you likely 90%. Right on, bro. Good luck with the timing. I really do. I hope you time the shit out of it.
hey, speaking of Dash, the actual physical Dash, the currency.
The actual digital currency.
Yeah, the Dash. I was looking at that. Man, I nearly put some money in there, and just on the fact that the last bull cycle, I think from memory, it went to 2.5K, and it's only at $300, and it hasn't hit its 18.
It's got a use case. It's used a lot in Venezuela, to be specific.
Yeah, really. And is it on?
And it's one of these proof of work protocols, so you can mine it, right? With not anywhere near the competition that you would face if you were trying to get into Bitcoin mining, right? Just like if you decided you wanted to mine, you'd have less competition if you were mining Litecoin or Bitcoin Cash. You know what I mean?
Yeah, no, I do. I just sort of like the chart when I see it at. I was going to buy in at 280 Australian dollars, but I don't know. I was looking at all different other things, but I sort of wish I did. You reckon? Well, you reckon? I don't know. I'd like to see if it hit all-time highs again from 300 to 3,000 is quite a. I'd like that. I'd take that. I'll put a bet on that.
Look at the user growth. The wonderful thing about all these things, Simon, is you can find an explorer to get the analytics, right? What's the user growth rate looking like? Is Dash continuing to increase month over month its user? The number of new wallets, are transactions continuing to increase on the network? I mean, are metrics that show you growth happening on that network? If the answer is yes, and its price is underperforming the rest of the market, you might have found a profitable trade.
Yeah.
You know what I mean? And I do not, I don't begrudge anybody making money. Me personally, I'm not a trader. I pick bets that I believe will have ROI based on my calculations. You know what I mean?
Yeah, no, I do. That's that'd be if you could put some cheeky bits in on Dash, like if I was thinking back on 3 or 4 grand on there, and if it really went up to all-time high again, well, shit, that'd be okay. I'd take that.
Is there any way to earn yield on the thing? Like, is there a platform that you can stake it on, or is like a Celcius or a Nexo or Voyager or somebody that'll give you a yield on it?
I think there is,
that would be the ticket, right? Throw $1,000 on it, $2,000, whatever your investment is. Have it sitting there compounding itself for you while you wait for it to do what it's going to do. Take a stop loss number, right? Pick a number. If it drops below this, I'm selling. I'm out because it's a trade.
Yeah, look, I mean, are you getting 17% on your Cell token? Are you?
My blended rate is 5.
Yeah, right.
But there's some things I'm getting 10, 20, 30. But like the Audius that I'm staking on that wallet gets 26%. The
The FET gets 10. The FET gets 10. But some of these things I'm only getting 2 or 3% on, like my Hulu, my hot token, right?
Yeah.
Holo chain, the hot token, I only get 2%. Like Casino Coin, I get 4%. So there's enough of the ones that are under 5 to counteract the ones that are over 5. So I say just have about a blended rate of 5.
You're telling me you're getting 26% on something and you're holding it in your own wallet?
Yeah.
Holy moly!
I don't even want to tell you the 42.9% I'm getting in the Singularity
what?
Net D DAO, the Singularity DAO, which was a free airdrop token, right? A free airdrop token that I got for owning AGI is earning 42.9% in my bonded staking pool.
So that's not in your own wallet.
And that went from 20. No, it's in my wallet. Yes, it's in my wallet. My private keys. Thanks for having me.
Oh, see, this is what I need some training in. I like.
And the thing went from 20 cents to $5.50 in a month.
And
dude, I'm crushing it on that thing. It's like having a money machine, little money printer.
Yeah, well, that'd be right.
It's exciting.
Yeah, but that's some good return there, Jerry. Like, you jeepers.
JDO asked a good question. He asked me if I'm converting my rewards into coins. JDO, I'll be perfectly honest with you. No. What I was doing is I would set goals. I want this amount of coins. And so what I would do is I make an investment and I find a place to earn yield on it. And I could let that just go and know that in this amount of time, I will hit my goal. Like some tokens were 2 years. I had 2 years before I hit my quantity goal. Some things did really well. Cardano, I pulled rewards off the table. And the reason I pulled rewards off the table is because I'm buying a piece of property down here in Costa Rica and I'm going to build it. I'm going to build my dream home. So there are some tokens that are producing some incredible yields that I'm scraping off the top to build my construction fund, I guess you would call it. What I'm going to, the money I'm going to use to build my dream home. Yeah.
46%.
Yeah. 46.9% in a bonded staking pool.
That's ridiculous. Like, and
it won't be that way. The minute once the metrics, once the saturation of DAO stakers come in and they saturate the staking, the rewards will come down to earth. Don't trust me. This is not indefinite. This has got a life. You know what I mean? It's got a shelf life. It ain't going to be that. If I get that for another 2 or 3 months, I'll be tickled.
Yeah, it makes me think about Flare, how important it's going to be an early mover on the Flare network to get those returns on your XDCs.
There you go. For all of us XRP holders that have been here since December 12th and had a wallet snapshot opportunity. I was holding all my XRP on Nexo at the moment, at that particular time. And so I've got 130,000 Flare coming to me. Over the course of the whole thing, I am going to be more than happy to utilize that in such a way where I can earn yield on it.
Freaking dump that shit. Buy your property, man. Seriously, don't do that.
I don't know about dumping it because I don't know. I mean, all the paper trading crap with the FLR token through that company in India and the Bitrue and stuff, I don't think I don't know. I can't foresee Flare coming out the gate at $1. I mean, if it was, I'd be tickled pink. Maybe I'd scrape 30% off the top, put another, I mean, heck, that could be a guest house on the property. You know what I mean?
Yeah, well, look, it's a lot of money, really, just to be handed out, isn't it? Just to be handed out. I'll take that. Yeah.
I'll take it too. The one thing I will not do is I will not sell it all. I guarantee that. that is something I've learned the hard way. I've adopted this philosophy about a year and a half ago. Well, hello, Anna, and welcome to the show. I don't sell all of anything. You know what I mean? If I know I want to get all my original investment out plus my profit of something, I will keep a bag of it as a free roll because it's earning yield somewhere. It does not hurt me to continue to have a position that is all profit and has a yield mechanism, because you never know in this space. You don't know. Nobody can tell us in 10 years these will be the top 100 coins that'll be here.
Well,
I don't know.
How do you think XRP will fare up with this SEC rubbish? What do you think will be the outcome, man?
Oh man, I love XRP, have always loved XRP, but I'm the wrong guy to confirm bullshit biases on the SEC outcome. Here's the thing. SEC, no SEC, does not matter. Until the IRS changes the designation of tax treatment for XRP, XRP will never be a U.S. entity for bridging one asset to the next asset. Yeah. Period. End of story. Drop the mic. Who cares what the SEC does and does not do? Until the IRS changes its designation of XRP from a digital asset to a virtual currency where it does not get the same tax treatment as property, it is not going to be a monster bridge currency for the US dollar, US companies to anything ever, period, end of report. Just forget the nonsense. There's too many alternatives. How about a stable coin? Can I get you a little USDC on the XLM protocol?
Yeah, I've got a bad feeling that we're just going to get a really unjust outcome. I think we're just going to get screwed.
Well, I don't know about that. I think Ripple is going to do fine. And I think eventually rational actors will make rational decisions. But that, I mean, we all know how politics works. It takes a while sometimes before rational people make rational decisions and pass rational laws. So until that time comes, I think it's better to tamper your expectations for XRP and especially anything related to this case. You know what I mean? I think a lot of people are holding a fucking shit ton of XRP and they want to hear everything's going to be okay. The SEC is going to settle this case. And before you know it, you'll be driving your Lambo. I'm not that guy.
I know they're not. They don't want a Land Cruiser.
I spent 3 years in this space, 2.5 of it with 90% of my portfolio in XRP, and watched this market explode around me. Hello, Dakota. XRP is a great asset. It's just what Ripple is designed its use cases for it around happen to, I know, Apex, I am well aware that FinCEN and the DOJ has classified it as a currency. The IRS doesn't seem to listen to FinCEN, and it doesn't seem to listen to the DOJ, obviously. And until it does, that is the facts, Jack. So, Brady, come on in. I want to say hi to Crypto Cajona. Aloha, mi amigo. Lone Wolf. Metalac. Let's see, did I miss anybody? Anna, again, thank you. You're new to the show. I've never seen you in here before. Great to have you. Brady, come on in for final thoughts. We'll get you and Simon to give your final thoughts, and we'll sign off, and I'll go put some diaper ointment on my nose because it is killing me. Dude, I'm having to put diaper rash ointment on my nose. It hurts so bad.
Hey, I'm getting a flat battery, so I've got to go.
Oh, then do your final thoughts, Simon.
My final thoughts is, Jay Clayton, you're a dirty, dirty dog. You should be ashamed of yourself. Put your head back in the toilet, Jay Clayton. Stop. Done. Finish.
And thank you for having me.
Yeah, oh yeah. Thank you for having me, Jerry.
Thanks for coming on, Simon. It was nice to meet you.
And we're done. We're done. To all you dirty mongrels at the SEC, have a good hard look at yourself. I can see you. Your mother can see you. Your grandmother can see you. Knock it off. Knock it off. Done.
Oh, Simon.
He's getting into the family.
He was right in there. So, Brady, thoughts? Have I lost my mind, or am I onto something?
You're always onto something because you're always thinking, and that's all that we can do when it goes sideways. And I guess I'm not going to be bummed when we're sort of at the same price, at least for Bitcoin, mid next year, because it could happen. Everyone thinks it's going to do something else, and that's kind of when it does the exact opposite, and everyone then spills over their milk, and we all know what happens after that. So as long as you just keep thinking about how you can either invest more with a better philosophy or increase cash flow or more dollar cost averaging, just keep stuffing what you can and survive on, what is it, Campbell's Thick and Chunky? Keep the crypto flowing, because you can get in one crack at this. It's not going to come around again.
We're all coming at this from different angles, but we all pretty much have the same goals, and that is to get a return on our investment. Some are here to build futures for themselves. Some are here to supplement their future. Either way, we're all hey, Chris, we're all kind of, we all pretty much have the same goals, right? It's really, really simple. We want to find projects that we understand, or at least can explain to ourselves, justify why we're involved in them. And hello, John. We want to get a return on our investment. And we want to have some level of security in that. Well, it's very difficult. Most people, bottom line, are risk adverse, right? And this is a volatile space, but it's becoming less volatile as more and more people come. As more and more dollars get parked on these monetary networks, the volatility dampens and all the other stuff. But the other side of that is that with more people and more money on these networks, the less ROI. So to get the thousands of % returns, you have to suffer through some shit. And those of us that have been here longer than a year, 2 years, 3 years, 4 years, 5 years, the longer you've been here, the more shit you've suffered through. And that's just the truth. But you get rewarded. So obviously, if you're brand new, hey, welcome. Find some projects you really like. Get involved. Dollar cost average your way in. If you feel comfortable with the risk of using a platform or learning how to download your own wallet and earn a yield on it, every dollar you put in will compound. You'll have compounding interest working in your favor, which is like another way of dollar cost averaging. I did my math, just quick side note. I did as an exercise every once in a while, I will go through my entire portfolio, gauge out the actual yield, convert all of that into dollars, and look at it. What would that be if it was an income per month? I'm earning $3,200 plus a month in yield. That's $3,200 of crypto assets are being added to my portfolio on a monthly basis with no new dollars coming in. Well, eventually I'm going to start pulling that as a passive income in some way, shape, or form. Hopefully it'll be $7,000, $8,000, or $9,000, $10,000 a month. But a boy has to wait. Sometimes you have to delay gratification. And for some of us, that's what we've had to do. And for others, it's been a real seamless journey of dedicating X amount of dollars per month to our investments and watching our portfolios grow. Whether it's been easy or hard, here's the thing, folks. Patience will be rewarded. We saw it with the internet. We've seen it with the growth companies that were built on network effects. And we can assign all of those attributes to this space. It's really easy to, they're very correlated. So thanks for tuning in. We'll see you next week right here on Market Conversations. Till next time, Pura Vida.